There are 7 levels of investor, but most people never make it past level 3. They get stuck. They dabble in stocks, panic when the market dips, or leave their money sitting in cash, never realizing why their portfolio isn't growing. And here's the real problem. Most beginners don't even know these levels exist. They don't know where they stand, what mistakes they're making, or how to actually move forward. So in this video, I'm going to walk you through all 7 levels of investor and show you exactly what to focus on in each stage if you want to grow real wealth through the stock market. Let's dive in. Level 1, the stock avoider. If you're at this level, investing feels intimidating. You've heard people talk about stocks, maybe even thought about it yourself, but you never actually take the leap. Instead, you let your money sit in a bank account, earning almost nothing, while inflation silently eats away at its value year after year. How do you know if you're here? Simple, you don't own any stocks. You might be worried about losing it all in the market, or you tell yourself, I'll invest when I have more money. The hard truth? Avoiding stocks is actually riskier than investing in them, because while the stock market has historically grown around 7 to 10% per year, your savings account barely grows at all. The good news is, moving up from this level is simple. All it takes is starting. Even if it's just $50 a month, getting invested puts you ahead of the stock avoider. Level 2, the gambler. This is where a lot of beginners end up. You finally decided to invest, but you treat the market like a casino. You chase hot tips from social media, you buy whatever stock is going to the moon, you jump in and out hoping to time the market. It's exciting, until it isn't, because sooner or later, most gamblers lose money. Why? Because they don't have a plan. They confuse luck with strategy, and when the hype stock crashes, they're left with losses and frustration. If you see yourself here, don't feel bad. Almost every investor goes through this phase. The key is not to stay stuck. Level 3, the passive investor. This is the stage where most people finally feel like they're doing the right thing. At this level, you've overcome fear, you've stopped gambling, and you've started investing in a smart, steady way. For most beginners, that means index funds or ETFs, broad baskets of stocks that track the market. And honestly, that's an amazing place to be, because history shows that someone who simply buys and holds index funds and never touches them will often outperform the majority of professional traders. But here's the catch. Most passive investors stop here. They invest a little into an S&P 500 index fund, set up a retirement account, and never go any deeper, which means they're doing good enough, but not building the kind of wealth they could. How do you know if you're at this level? You automatically contribute to a 401k, you dollar cost average into index funds each month, but if someone asked you, what businesses do you actually own? You wouldn't know the answer. Here's the danger. Without real understanding, a passive investor panics when the market drops. You've probably seen it before. Headlines scream, stocks are crashing, and suddenly people sell everything at the worst possible moment. Why does that happen? Because they don't know what they own. They only know they have some stocks. If you're in this stage, your focus should be 2 things: education and consistency. Keep investing every single month, no matter what the headlines say. That consistency is what compounds into serious wealth. But at the same time, start learning. Learn what an ETF actually holds. Learn the difference between an index fund and a single stock. Understand the basics of why companies grow and why the market rises over time. Because once you go from I own some index funds to I understand how stocks work, you'll unlock the next level. Quick note. If you're serious about starting your investing journey, I've put together a free masterclass where I show my full step-by-step system for building your first stock portfolio, avoiding beginner mistakes, and growing it over time. You can watch it anytime using the link in the description. Level 4, the active investor. This is where investing shifts from being something you set and forget into something you actively learn and practice. At this stage, you don't just rely on index funds, you begin exploring individual stocks. For the first time, you ask deeper questions. What does this company actually do? How do they make money? Are they growing or shrinking? Instead of buying a stock because someone recommended it, you're learning to evaluate businesses. Maybe you read your first earnings report and see revenue, profit, and cash flow. Maybe you start comparing companies. Why does Apple trade at a higher valuation than Ford? Why does Microsoft make more consistent profits than Netflix? And here's what makes this level so powerful. You realize that stocks aren't just tickers on a screen. They're real businesses with products, employees, and strategies. This is where investing starts to click. Now, here's the danger at level 4. Many new active investors swing too far. they overanalyze, they get obsessed with stock charts, or they think they need to predict every short-term move. That's just another form of gambling in disguise. So how do you succeed at this stage? Focus on simple fundamentals. Look for companies with steady earnings growth. Pay attention to whether they have a strong competitive advantage. Don't chase hype. Invest in businesses you actually understand. At this level, your goal isn't to beat Wall Street, it's to build confidence in your ability to make informed decisions. Because once you can look at a stock and say, I know why I own this, you've left the world of guessing behind. That's what separates an active investor from a gambler. Level 5, the strategic investor. Here's where the real transformation begins. At this level, you're no longer thinking about single stocks. You're building a portfolio, balancing risk and reward across different industries and sectors. You don't just ask, should I buy this stock? Instead, you ask, how does this stock fit into my long-term plan? You diversify, rebalance, and think in terms of strategy, not excitement. And that mindset shift is what separates a casual investor from someone on the path to serious wealth. Level 6, the wealth builder. This is the stage where investing starts to feel automatic, like the wealth is building itself, even when you're not thinking about it. At this level, you're no longer asking, what stock should I buy next? Instead, you're asking, how can I make my entire portfolio more efficient, more powerful, and more consistent? Here's what makes a wealth builder different. Dividends aren't just a bonus. You reinvest them automatically, letting your money buy more shares without you lifting a finger. Over decades, this small detail adds up to hundreds of thousands of dollars. Contributions grow every year. Instead of keeping the same $200 monthly contribution forever, you increase it with every raise or every extra source of income. That steady increase fuels exponential growth. Taxes become part of the strategy. You know the difference between investing inside a tax-advantaged account versus a regular brokerage. You might harvest losses in a bad year, or strategically place certain stocks in certain accounts to minimize taxes. You track performance like an investor. You don't panic over day-to-day market swings anymore. Instead, you focus on long-term trends. Am I consistently adding money? Is my portfolio growing year over year? And here's the shift that really defines level 6. Your portfolio isn't something you hope will pay off in the future. It's already working for you, silently compounding in the background while you live your life. This is also the stage where you begin to notice something powerful. Your investments might be growing faster than the money you're putting in. That's when you realize compounding isn't just an idea in a textbook. It's happening right in your account. That's why level 6 is called the wealth builder, because at this stage, your money has officially become a machine, and every year it works harder than you do. Level 7, the legacy investor. This is the top of the mountain, the level where investing stops being just about you. Your portfolio is large enough to give you freedom, whether that's retiring early, funding your kids' education, or giving generously to causes you believe in. At this level, you're not just buying stocks, you're building a legacy that can last for generations. This is the ultimate goal of investing, not just wealth, but freedom and impact. So now you know the 7 levels of investor and where you might be right now. The next step is putting it into action. That's exactly what I cover in my free investing masterclass. Inside, I'll walk you through everything, from picking your first stocks to building a portfolio you can actually retire on. It's 100% free, and you can watch it right now using the link below. I'll see you inside.